Tesla has been on a tear lately. Its stock is up more than 40% year to date and now has a bigger market valuation than U.S. automaker Ford. For a moment, it also surpassed General Motors, but then its share price retreated, leaving GM at number one. The company hit these milestones after reporting it had delivered over 25,000 vehicles in the first quarter of this year. It was higher than anticipated and marks a 69% increase from the same period a year ago. Expectations are now running high it will deliver on its goal to launch the budget-friendly Model 3 sedan by the end of 2017.
So the Model 3 is a game changer for Tesla. It's important for their investment thesis that they will become profitable by selling a mass market vehicle and reaching over 500,000 units per year in the next couple of years, which would make them profitable.
E-vehicle sales boomed in 2016. In the U.S., they jumped 37%. Internationally, sales were up 41%, with global sales topping 777,000 vehicles. Tesla is dominant in the luxury e-vehicle market, and it hopes to hit the mainstream with the Model 3. It's also vying to be a leader among driverless cars, but on that front, it faces an uphill road. A new report by Navigant Research puts Tesla at number 12 in that race, lagging far behind Ford and the other big U.S. car manufacturers.
In terms of raw technology, we actually ranked Waymo, the Google spinoff, as number one overall in terms of technology. But the traditional automakers aren't that far behind on the technology front, and they also have manufacturing capability, the ability to service and distribute vehicles to consumers, as well as the fact that they're developing mobility services to use these vehicles.
For that reason, Abuel Samid believes Ford, GM, and others are more likely to successfully commercialize the technology than Tesla. Nevertheless, enthusiasm for Tesla remains. Some analysts warn they think the stock is overvalued.
Well, we think that you're paying a lot of front for the future potential that is still right now just potential. There are still execution risks. There are risks that the launch won't go as smoothly as planned. There's risk from increased competition that is arriving. So, with the stock where it is now, we think that there's more risk than reward.
Karina Huber, CGTN, New York.